Hello, welcome to the weekly tip series. What you're seeing here is a very short, to the point weekly tip about areas of concern for governance. If you want to subscribe to this on a weekly basis and get it delivered to you by text, by email, or on the video, then go to my website, which is www.basicboardgovernance.ca. You can subscribe there and you can find lots more information about these topics. Thank you. Should your organization have audited financial statements prepared each year? This is a question that will be answered by looking at the bylaws. If your bylaws require you to be audited, then you're going to have to, with probably 75% agreement of your members, agree to forego an audit in order to avoid breaking one of your bylaws. So the question generally is, audits cost a fair amount of money. There's three things an accountant can give you: an audit, a review engagement, or a notice to reader. They are in sort of order of expense there. The audit's the most expensive, the review engagement's kind of middle of the road, and the notice to reader is pretty cheap. So the audit will give you an opinion from an accounting professional that your financial statements are prepared in accordance with generally accepted accounting principles. That audit will give you the right to rely on those financial statements. That's the highest level of assurance you can get. A review engagement will give you assurance that the person who prepared it, the accountant, has looked, has asked questions, has done a review, analysis, and inquiry, and has not seen anything that causes them to believe the financial statements are not in accordance with generally accepted accounting principles. Well, that's not as strong as saying they are in accordance. That's a form of negative assurance. They haven't seen anything that causes them to believe, but it could still be there. And the last one, the notice to reader. The notice to reader is not an acceptable communication for any not-for-profit board. A notice to reader basically says no matter what happens, it's not the accountant's fault. Because of that, a board can't rely on that accountant. If the board can't rely on the accountant, they have to satisfy themselves some other way that their financial statements are in fact right. I would recommend either a review or an audit, but the board should keep in mind that the audit gives them the highest level of confidence that they can get. So boards that are worried about their liability should make sure that there is an audit being performed every year. Thanks very much.